Hello, everybody. Kirk Spano, Investing 2020s. And today we have a lot to discuss because the world, despite my optimistic view of the future, we saw that there was an invasion of Israel by Palestinian activists. In particular, Hamas was behind it, as far as we know. And we are trying to find out what else is going on, particularly when it comes to Iran's involvement, which could make this much more of a flashpoint than it already is. As many of you know, a great deal of the staff at Seeking Alpha is Israeli, Jewish, and we have checked in. It does look like everybody is healthy and accounted for at this point, but many of the people do work from Israel, so it is clearly a trying time for them. So I would hope that we all can have some prayers, thoughts for them, and hopefully this all works out quickly, but as history demonstrates, it probably will not be. The Israeli defense minister ordered a complete siege of Gaza, and when you take a look at this historically, this is a big deal. Israel has tried to figure out a solution for the Palestinian homeland, not always doing it well, particularly certain people in their government over time. And this is a conflict that's gone back beyond hundreds of years to thousands of years. And if you haven't really taken a look into the historical maps, you should probably do that. Ultimately, China chimed in on this, and clearly we would want to know their thoughts. And they took the two-state solution approach and chose their words very carefully, which showed that they have empathy, at least publicly, for what Hamas did. And I think that is telling for where we are historically right now and how the solutions will have to play out. Ultimately, China is a linchpin on everything because of their aspirations for global power and their sheer size, financial might, developing military might, but they can be dealt with. So that is the positive there. The problem is, as we all know, deals in the Middle East cannot even be considered fleeting. They've just been elusive for thousands of years. And I don't know what the solutions are, but I do know that there is some damage that can be done to the global economy if this ends up being the event that I warned about, something that drives energy prices up higher and causes us to go into a stagflationary global environment. Talked about that last week. We've talked about it for years, actually. I will say that I am concerned that this discussion that I had 6 years ago may be finally playing out. If it turns out that Iran was aware of what was going on, then this could spiral out of control. I believe it was 2 weeks ago, I talked about the possibility of a security pact between Israel, Saudi Arabia, and the United States. And one of the quid pro quos would be more oil from Saudi Arabia, at least for the next several years. Maybe a contract to help refill the Strategic Petroleum Reserve. If that pact occurs, and it's clearly one of the things that is on the minds of analysts, then a war with Iran could be coming. I don't think that there's any doubt that if it can be proven, and maybe even if it can't be proven, but if Iran was involved, Israel's going to go after them, at least by air and by assassin. And who knows what that could spiral into. So this is something that we should take very seriously, not only as people, but especially as people, and also as investors, because this is not something that the Israelis are going to take lightly. And I think comparisons to 9/11 are appropriate. And we have all seen how the world has changed since 9/11. And I know that some of the younger folks, it's been normalized because it's what you grew up with the last 20 years, 22 years. But if you have vivid memories of the 90s, 80s, or 70s, or 60s, the surveillance state that has emerged, the animosity between opposing groups, inabilities to compromise, to walk in other people's shoes, even among Christians who are supposed to be good at that, has seemed to be the one thing that hasn't gotten better, at least at the margins, because of the fringe elements to pull us apart from the middle. And what's going on in the Middle East right now is clearly the long-term manifestation of that. And I will just throw out there that I think the internet has contributed to a splicing. Some want to call it diversification or democratization. but it's not. It's a splicing of factual information into half truths and spins and propaganda that for the human mind is very confusing. And in an era, at least in the United States, where education is broken down, 40 years of not doing it well, now since COVID, hundreds of thousands of kids essentially being truant for years. The parents don't try to get them back on the right track because the parents are messed up too, or undereducated and ignorant of what makes the world go round. You get higher risk scenarios that can play out, even though they shouldn't be probable, given the general direction that the world is going towards better standards of living. Historically, better standards of living have always led to more peaceful times. We have seen the evidence of that with fewer boots on the ground around the world. With certain flashpoints, and there was a book called Flashpoints back in the late 80s, I believe. I read it in college. If you can find it on Amazon, it's a quick read, Flashpoints. I'm sure there's all sorts of updated versions. I read foreign affairs, so I basically get the stuff that could go wrong in the world or go right, how to bridge gaps. But the flashpoints are more dangerous because the weapons are worse and the radicals are more radical because the internet helps program them. And in a world where we try to have free speech, the amplification of ignorance and propaganda have a very big megaphone. So now we face a situation here where we have to ask, how big is this going to get? And I would encourage you to go and read this particular article on Politico because it nails the points. I haven't looked at foreign affairs yet, but I'm imagining that there's something similar to this. In general, how big will it get? Is Iran involved? If they are, this is going to get bad and oil supplies will get upset. Hopefully the Saudis come closer rather than breaking further away. And in the post-Khashoggi era, I don't know how much traction Saudi Arabia can get with getting closer to the United States. Many ask, how did Israel not see this coming? Again, technology, encryption. Will this affect Ukraine? Hard to know. My guess is that there is some sort of military aid bill put together that encompasses both Israel and Ukraine. As an investor, we probably have to think about that. What is China's role? As much as I call the Saudi Arabians the Ferengi, Chinese clearly have a streak there as well, though I still refer to them as the Romulans. I believe that China is going to try to pretend that they care about stuff, but it'll really just be statesmanship and an extreme level to get what they want. I maintain that there are solutions with China. We'll see. In the Global Trends ETF report for October, talked about a number of topics about where a correction can go. The market, in typical fashion, started down today and then started to rally. Typical sell-off and then traded back up before what is probably another drop down. TLT rallied a bit, and I think that we are seeing that bottom on TLT that I talked about last week. So there are a couple of different trades that you could probably make there, including an option trade that we'll talk about in a second. I think there are ramifications here for Bitcoin. Ultimately, as I've explained, Bitcoin will continue to become a currency that the emerging markets use to pool their strength rather than worrying about the Nigerian currency or Brazilian real or, pick any one of dozens of emerging market currencies. They will help their national accounts by owning Bitcoin. And as we should know by now, as we've discussed, a currency generates its value from the economic productive capacity of an economy. When all the emerging markets, which is where most of the world growth is, own one common currency, whether it's sovereign or not, their combined strength will lend to that currency's intrinsic value. Because Bitcoin has a finite number of Bitcoins, can't be printed any more than is already scheduled, Bitcoin, I think, does very well. Locally in the United States, we have Bitcoin ETFs that seem to be imminent. Big players are getting behind it. The SEC seems powerless to stop it and will probably offer its typical mediocre regulation. Maybe a little bit better than mediocre this time because Gensler isn't a fan of Bitcoin in general. But I don't think he completely understands the emerging markets nature of it. And unfortunately, sure, cryptocurrency can be used for bad things, but so can every currency. Let's be real. So once again, I'd be reminding you, take a look at the Grayscale Bitcoin Trust because it's trading at a discount still. Not a giant discount anymore, but still a discount. And Bitcoin seems destined to get to six figures. Talked about the energy select sector spider getting over 100 in the next year. I think that's probably even more likely today. And we talked about clean energy. And in the retirement income options article, I mentioned that the entire clean energy complex is at the bottom fishing prices. So you should be scaling in there. So I posted the retirement income options September expiration report on both websites. I'm not going to show the trades here, but you have the article so you can read the trades. What I would point out is that some of the options markets are thin. So all you can really do is buy the ETF or the stock. 3 of the satellite stocks that we want to be invested in are at bottom fishing prices, but have very thin put option markets. And that's interesting. There's not really put options to sell on a few of these stocks. So you have to ask yourself 2 questions. Is it just a thin market, or is there not many people who want to buy puts? And I think at these prices, and then taking a look at the short interests, there's just not a lot of people who want to bet against these satellite stocks anymore. The shorts have made their money. They know these stocks aren't going to zero. And with the higher for longer interest rate mantra finally being believed by the market in the last several weeks, small caps have been under pressure and large caps have been too. Somebody pointed out after I did that excluding the top dozen stocks or so in the S&P 500, the rest of the index is negative for the year. Again, there's a lot of cheap stuff out there right now. So the question becomes, how much cheaper can it get? I think on the small caps and the mid caps, not much cheaper. I think you're going to see a lot of double and triple bottoms. Many of them are already occurring. Large caps have further to fall, though, because they didn't come down as much. And still clearly 100 to 200 zombies on the S&P 500. Companies with high debt and no real growth to speak of. No real margins to expand in any way, even with AI. So the S&P 500 suffers from the weight of 100 to 200 companies that are shrinking, essentially, or fight to chop sideways. I would tell you to start to buy in with your cash. I am fairly confident. I think if any more bottoming in the market occurs, it happens sooner than later. I don't know that this is going to stretch out till sometime in the spring anymore. Last week, we talked about all of the hedge funds betting on an interest rate increase in November. I think the only way that happens at this point is if we really see a move up in oil, like above $100 a barrel. And I don't think it's going to happen because I do believe that it is in Saudi Arabia's best interest not to let that happen. And they have plenty of oil that they can pump into the global markets, 3 to 5 million barrels per day pretty quickly. And the reason I think it's in their interest to do that is because ultimately their old fear is still their fear. They don't want war with Iran. Iraq and Saddam used to be the wall between them. Now the wall between them is going to have to be an implicit promise from Israel and the United States, and maybe Egypt, a few other countries, to come to their aid if Iran becomes more belligerent. The good news on Iran is that they're still good people, and that the Ayatollah gets a day closer to death every day. The problem is his kid is apparently more aggressive, a little bit more nut job to him. So, again, we can hope that the Iranian people finally get control of that country away from the mullahs, and maybe some good comes out of the bad that we see today. I think there's no doubt in anybody's mind at this point that clean energy should be top of your mind for investing. And I would think that this conflict that we are seeing start right now could be the thing that makes everybody on the planet go, you know what, maybe it's time for clean energy. And when I say everybody on the planet, I mean the third of the people in the United States who all they can do is repeat over and over again, let's drill more oil, because they don't have the creative capacity. I think that's about as diplomatically as I can say that, to think about a world with less oil and gas and coal. When we take a look at the TradingView screener and we rank it, these are our stocks. This is how I have it set up. We have some stocks that are overbought, not many though. Basically what you can see on this sheet, you can take a look at for covered calls or for trimming, depending on your asset allocation. Turn it over though, and you see a lot of companies, including some utilities, that are very oversold on a monthly basis. We change this to the weekly It's an even more dense list. We're seeing some good companies get cheap. Brookfield Renewable, Clearway, Atlantica, I'm not so sure I want to deal with, but we'll figure it out. Dominion. I don't know if management is doing what they need to do, but it's so cheap at this point that you have to think about Dominion if you want a regulated utility. Solar Edge, I'm getting through ETFs. NextEra Energy. I mean, this is wow. I mean, look at that. Just falling off a cliff. So I actually don't know why this happened. I'm guessing there was some event. I don't know if it was just a spinoff or if they got crushed on something. But we should take a look at this because it's a pretty cheap price if the intrinsic value hasn't changed. Again, I have not looked it up. You go through the list. Even companies like Pepsi are kind of interesting right now. SunPower. Paramount is clearly undervalued by half, if not 70 or 80%. Warner Brothers Discovery is too. Square remains one of my favorites. This one too is at bottom fishing. I think I had it up here already. I mean, just look at that. Talk about a round trip, right? So if these prices and these prices, are basically, the same, what does 3 years of history do for their potential value? You'd think it'd be higher. So I do think that we are basically at bottom fishing for Square, Block. And remember, nobody really values the Bitcoin on their balance sheet. That's all gravy. So I would take a look at that. One thing to remember is that most small proprietors tend to do well during periods like this, especially service providers, right? Strong employment, but inflation. If you're providing a service, you get more of the benefit of inflation than the cost. Square lends to those folks because they have a hard time getting bank loans. And because Square processes their payments, they take the payment for the loan directly out of the gross receipts, up to 15% a day. That's what my daughter was paying. She borrowed some money to buy equipment. 15% of her gross revenue goes to Square, up to it was like $1,000 a week. And Square will give you 30 to 90 days if you need a break at a lower rate of return, lower rate of repayment, that is. But then it goes right back to collecting. They have an incredibly efficient system, and they're charging credit card interest rates. So I think that their level of getting paid back on that money is incredibly high. I know it is. And they're making a good return on all these small businesses. If the small business boom continues that I projected several years ago during COVID, and it has in fact taken off, if small business, in particular proprietorships, continue the resurgence, right, the replacement of the baby boomer businesses by millennials and Gen Zers, Square is in a great position, just a great position. I think Apple's going to get a share too. I think Apple's going to be a big deal in this space, but they're gigantic already. You can make more money on Square because you're starting at a smaller number. Finish up with clean energy. PBW, all cap exposure, modified equal weight, so you're not heavy into any one company. It's like 70 companies, all at 1 to 2% allocations. At the bottom fishing right now. You can quibble. Oh, but what if it goes $2 lower? Yeah, buy slow, buy small, but start buying if you haven't already. And there is an option trade to be made, but it's hard to make because it's a thin market, so you probably just have to be a buyer. This one, for sure, we'll be using this in the trading room at Fundamental Trends, but I think that this one, I think solar could be roughly a triple over the next 3, 4, 5 years. I think it's going to crush the S&P 500, and it's going to beat XLE handily. These companies have all been turning the corner on profitability, and the growth rates are enormous. There's going to be some M&A as weaker companies financially join stronger companies. And then there's efficiencies that come from that. The M&A in this space is going to be very, very good for this index. Just like it was when all the oil companies started going under and merging. The index becomes stronger. And that's what you're going to see here. I think the Invesco Solar ETF is something that if you're an aggressive investor, you have to be using. This may be going to be one of the bigger money makers out there. Just want to mention Palantir, which at a $38 billion market cap is plenty big to be on the S&P 500, and yet it's not. The company has about an 8% short interest, I believe, not on the S&P 500. What's the other criteria for getting on the S&P 500? Got to be profitable, right? They've turned profitable. So I think that Palantir is one that you need to be aware of because the S&P 500 magnet is going to suck their market cap up. And the bigger they are, the more the S&P 500 has to buy when they get added to the index. Palantir should be a significant position, I think, for almost everybody. All right. I saw a question on here. Somebody mentions next era substantially reduced growth expectations. See, but we talked about that a year ago. So now the market is catching up, which means that the price is overshooting to the downside. So we probably ought to be looking at it. PBW, should we also own some Sun Power? That depends on if you're a stock investor, right? If you want to have exposure to a half a dozen companies directly, plus the indexes, that's on you. You have to decide how you want that. I tend to have less ETF exposure and more stock exposure, but I am kind of moving towards a 50-50 mix because the ETFs sometimes are just so easy to use, right? I was normally 3/4 stocks and 1/4 ETFs, but especially in client accounts who aren't telling me to be super aggressive. And a lot of my accounts do tell me to be super aggressive, but for the more moderate investor, the 50-50 stock the ETF mix is usually a pretty good deal. Somebody asks about QClean. QClean is the large caps. Top 10 holdings are about 50 or 60% of the fund. And it's Tesla. Rivian is actually the top holding right now. And I will tell you, I like that. I think Rivian's going to do very well. Those trucks they have, I tell you, by specializing on only the most profitable part of the EV market or the car market with trucks and SUVs, man, I think Rivian's in a good spot. I really, really do. And they're the top holding in QClean, and that's Tesla, Enphase, SolarEdge, Albemarle, right? The lithium producer. Lithium's crushed right now. So I really like QClean. Then I don't have to buy those stocks. I just buy QClean, and when the whole complex goes up, I can ride it up. When the complex starts to weaken, I can sell it and then do what I want on the stocks if I need to replace anything. There's overlap between all of these funds, QClean, PBW, so you have to kind of take a look. Remember, PBW, it's going to be mostly 1% and 2% positions. QClean has 6, 7, 8% positions on the biggest ones. So you have to understand your asset allocation. I recommend having something like Stock Rover or Morningstar so that you can do kind of an x-ray of your portfolio. Somebody asked, is Palantir appropriately valued now? I think the potential market for Palantir is as big as the defense contractors. What's Lockheed Martin and Raytheon and General Dynamics worth? I think you start taking a look at those, and you start to realize that $38 billion for Palantir, while maybe isn't as cheap as it was a year ago, I don't think it's expensive. And then we'll finish with Ametis because that's what we do. Ametis continues to have good news. They continue to execute. There's going to be financing news in the next couple of months. There's going to be bigger contracts from India. The renewable natural gas news was good. They just dropped $53 million to the bottom line. If you read the press release, it said that they applied $30 million of that to equity. $30 million is equal to the preferred shares. So I believe that they're in the process of retiring those. They have more contracts coming from the government, more loans from the USDA. The India contracts are going to be bigger because they expanded capacity at that refinery. If you haven't maxed out your position in Ametis, you ought to do it because it is clear that they're in the right place with the right tax credits, and they're going to be one of the highest margins, if not the highest margin refiner in the country at some point. That's how Icahn made a ton of money on his refinery investment the last 7-8 years. He found a refiner in the right spot with massive margins. Because of Ametis starting from scratch, just like Tesla did, they really have a nice ramp up. Somebody asked about Spire Global. Again, they're in that satellite basket. I like them because they're the RF, right? They don't rely on clear skies. I think Spire Global is going to become a behemoth in global shipping and weather. They're already starting to dominate those markets. The contracts are piling up, 30% growth rate, and the recurring revenue right now is higher than the market cap of the company, which doesn't make any sense. That means that the stock is undervalued by 70 to 90%, which means that it should go up between triple and tenfold. So it's not even hard math. So I do believe that over the next couple of months, you ought to be getting pretty much fully invested. And if the Fed isn't forced to raise interest rates because of stagflation, or more inflation. I think we've seen the end of interest rate increases, and I still believe that higher for longer isn't going to last that long. All right. Have a great day. Positive thoughts for the world, and think it through, and always take a look at it from the standpoint of how can things work out positively, because normally that's where we end up. It's not what the middle's always like, but usually that's where we end up. We're still here. All right. Have a good day.